Good morning, everybody. Welcome to the Thursday opening playbook, August 28th, 2025. Hope everybody's having a good morning or a good part of your day, whatever part of it is, wherever you are in the world. Good morning, Roy, Andy, Marianne, Sam, Buck, Piet, Mike. Overnight out already. Awesome, awesome. Good stuff. Overnight options program. Hey, Ann. All right, let's get started with some pre-show content. For those in their first opening playbook, this is a free daily live webinar that we try to provide timely market reviews in and trading education, occasionally some live trading, occasionally some special guests. We try and make some time for Q&A with all of you and basically use it as an education session. And then 3:30 p.m. every day, we also have closing playbook. That's a little bit more focused on trading the last half hour of the day. It's a little bit more fast paced. So we try and take this one a little slower, focus on teaching and market overview and things like that. If you're new, again, to the platform, when you join the chat, make sure you don't try and log into the chat. Just put your display name in and join the chat. You can click the hamburger menu at the top to shrink the column on the left and give yourself a little bit more space for the presentation. You can click the speaker button in the bottom left of the video to mute or unmute. You can click the double arrows in the bottom right to go full screen with the presentation, which will hide the chat and everything else, but give you the best view of what's being presented on screen. And you can also, or instead, click the little box in a box icon next to that, which is picture in a picture. So if you're on a device and in a browser that allows picture in a picture, it'll shrink the video and let you do something else in the background, like go to your brokerage account or another web page. It only works on some browsers and some devices. I suggest you try Google Chrome as your browser, and definitely works on a PC with Chrome, but everything else is kind of hit and miss depending upon what your device allows. Underneath the video, you'll see a low latency button or slider. You'll want to make sure that's off. That'll give you the best quality audio and video content. It delays everything by just a few seconds, and that gives the system enough time to give you the best quality results. And a few seconds really aren't going to make much of a difference. If you want to private message any of the hosts, me, Nathan, or Graham, you can find one of our chat messages and hover over it. You'll see some icons appear. You can click on that double speech bubble icon, and that will let you direct message or private message us in a separate tab, and only whoever you message will see it. That way you can ask a question, give a suggestion, give us your name, email, phone, that kind of stuff without the whole group seeing it. And then notice underneath the presentation, there's an announcement section. We have a whole bunch of links there to cool stuff. The first link is the link you should be using to get to this room. It will redirect to whatever URL we're currently live in. So you want to make sure that you're using that web address to get to opening and closing playbook every morning and every afternoon. The second link is for the latest replays. So yesterday's opening, closing playbook, and then in a few hours, it'll have this morning's opening playbook. And then by the end of the day, it'll have today's closing playbook. It's always the last opening and closing session. Older replays can be found on YouTube at the third link. And then there are a bunch of other helpful links there. And notice one of them is the $1 Playbook VIP membership. If you are not a member of any of Nathan's or Graham's programs, then you probably want to join the $1 Playbook VIP membership. It gets you a whole bunch of cool resources in our members area to go along with the opening and closing playbook sessions, such as tutorials, training, online calculators, invitations to special meetings like the one we're about to have at 11 a.m. today for members only, and other things. So take a look at those links, grab them all, copy them down somewhere so you have them. Today, Nathan and Graham are back after missing opening playbook for a couple of days because they had company meetings. They were back for closing playbook yesterday, and they're back for opening playbook this morning, although I won't be shocked if either of them are a little late because they flew home to their respective home states late last night, didn't get in till well after midnight. So we'll give them a little grace if they they come in a little later, a little groggy this morning. But we will be doing our market recap and outlook as we usually do on opening playbook. And we do have a special event today for members only. This will be a similar event to what we had last Sunday and Monday, although things have changed a little bit for people who couldn't get in on Sunday or Monday. They've opened up some other opportunities at, well, I won't go into too much detail. If you're a member, you can look in your different members areas in Graham's and Nate's programs or in the $1 opening closing playbook membership area. If they're not in every member's area, they will be within a few minutes. There will be a link to that meeting, which will be in Zoom. It won't be here because it's members only. So it'll be in, you'll have to have access to the members area in order to get the link, which will be a Zoom link. All right. That's all I have for pre-show. Let's see what we have going on in the chat for a minute before we get things rocking. Who else we got joining us? Place support me. Anybody? All right. Get rid of that junk. And I think we covered everybody who already messaged. So let's get going on the theme song, and then we'll get going on the show. Morning, John.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options in place in a locked display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options in place in a locked display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh.
All right. Welcome, everybody, to the opening playbook for Thursday, August 28th. Welcome to everybody who just joined in the last couple of minutes. In case you missed the pre show, Nathan and Graham are back. They flew home to their home states late last night. They're probably going to come in here with only one eye half open, but that's okay. And they've got some cool content coming your way. And we have a special members only meeting going on right after this at 11 a.m. So if you're not a member of any of their programs, you want to grab that $1 membership link in the announcements area and get in that while we're talking. So you're all ready for what's coming up at 11 o'clock. Morning, Nate.
Good morning, everyone. Hope you all are doing well. As Dave said, got back late, back in attic, trying to figure out what's going on in the market right now. I actually I got back late, and then I had a meeting first thing this morning. So I am really just outside of kind of out of the corner of my eye, just kind of looking at the market for the first time and seeing that obviously overnight. Drop on Nvidia, nothing too crazy. Then the big move up this morning, and then the move right back down. So it looks like we've got a lot of back and forth. Nice to see overnight options hit again first thing. I mean, that thing has just been a machine lately. Another winner today, even though the market is now back to red and looking a little dicey, just to get the win on the board, but. Yeah, I mean, as Dave mentioned, we are going to do that members only class at 11 a.m. Mainly, we're doing that class because a lot of people are mad at me. That's the main reason. If you guys know, we did the thing Sunday night, kind of walked you through a lot of the stuff that I was working on. We gave an opportunity to get the intelligence dashboard and everything I'm working on as part of my HQ. Close that down in under 24 hours. And then I got a lot of people saying I didn't get to see or whatever. So I'll just be very transparent with you guys. We did a limited thing. We can't do exactly the deal that we gave before. That's how this works. But we got a lot of pressure. So we're going to do for members only. Again, I'm not going to do it at all to the public, but for members only, we're going to open up a couple more opportunities. And I'd say even more importantly, that if you just haven't seen the presentation at all and kind of the concept behind it, whether you want to do everything with me or not, like that, I think that's also very important. So that'll be right after this, but we can't do it right here because this is obviously a public forum. You're going to want to grab your link from the members area, or if you are a member, you should get a direct link to your email, phone, all that knows you're a member. So one way or the other, find your way into that 11 a.m.
I think 50 people are really happy with you, and the rest of them are not.
Well, yeah,
because they got the deal of the century, and they got to see all that new stuff already.
Yeah, at least you just kept it to 50 spots, because if you had 200 people join, man, they would have gotten a steal. You'd be kicking yourself.
Speaking of new stuff, Graham, I heard you teased a little bit some of the stuff that you were working on, because I don't know how much you teased because I missed the beginning yesterday, but obviously. Our team has been all in on trying to create breakthroughs, much of which are on the technological side of things. And by the way, actually, if you go to 11 a.m., I put some of our notes of what we have invested into this, because sometimes if you're on YouTube, it's like willy nilly AI this, AI that, but this is a substantial investment on our side, several $100,000. Going in to help us get to the point of where we are now. And I think we've just kind of hit a dramatic accelerator on those sort of things that I'm really looking forward to. I think it's going to open the doors and ultimately be a huge win for all of you. So, Graham, I don't know, did you give a full sneak peek or what? Where'd you leave it off with, folks?
I gave a little sample sneak peek, but I'll do it again this morning.
Okay.
Just to show you guys. Again, it's been about 2-3 days. We didn't even get to work on it yesterday, really.
Yeah. But that's another one. Correct me if I'm wrong. I think that's another one that we talked about. Maybe we could get an initial version up really quick and do another members only kind of, first look at that one.
Yeah, that would be awesome.
So we got to put those details together, but pretty exciting stuff.
Yeah, it is. It's going to be a blast. When you guys are going to be so, I'm hopeful at least. I was blown away, and it takes a bit. I've been around for a while. I've seen a lot of things. It takes quite a bit for me to get really, really excited. I'm fired up about just the breakthroughs we've had over the last 2-3 days and what that's going to mean for you guys as subscribers over the coming weeks, months, and year ahead. I think we're going to have. I think we're going to look at our tools that we've been using over the last year or two and be in a year from now, be like, wow, why would we even use this when we have these things? Which are, I mean, the really cool thing too, and I don't mean to brag or anything, but I think that these are better tools than anybody else out there has. I know there's a lot of financial talking heads. I know there's a lot of different companies out there. This is like institutional level kind of equipment that we're putting together. It's really, really cool. And I wish I could just take credit and say I figured it all myself. No, guys, we have a full team of developers, really, really smart guys who are bringing these sorts of breakthroughs to us.
Oh man, when you said I can't say I figured it all myself, I thought you were going to say Nate figured it all out. But then you just
I thought he was going to do that too. I thought he was going to. We actually have a couple people really leading the charge here. One of our CEO Morgan really started the whole thing, and then Nathan really took it to applying it to tools that our customers could directly use. I think Morgan was focused on like the company getting better with AI, and Nathan said, well, what about our customers? We need our customers to be able to take advantage of AI, and started implementing that. And then that laid kind of the groundwork, the framework for all of our other traders to be able to go, oh, now that Nathan did that, we can use that and add on top of it, piggyback on it. So now we're doing that. It's awesome to see everybody really getting on board with it.
Yeah, it's going to be awesome. All right, cool. Well, we're going to go ahead, and this says Tuesday here, because that's what my template says on the waiting slide here.
Well, it's kind of like Tuesday for you. Today's your Tuesday. It's fine.
I know. I told you guys on Monday, I said, oh, we'll do the Tuesday full breakdown tomorrow, totally forgetting that we were going to be completely out with our annual meetings. So I figured today would be a good day to kind of look at where things are. We didn't get a chance to do that this week. Look at where things are in the markets and what we can do looking ahead from here. And Nate, I'm not sure if you added slides to this or if you have your own, but
I was just going to do that one-off trade. By the way, did you want to look at NVIDIA real quick before? Or
yeah, let's do that.
Because I know a whole bunch of people have that trade open.
So here is, if it'll come up here, come on, make it to the big screen. There we go. Here's our beautiful friend NVIDIA. We did a trade.
And this is from Closing Playbook for anyone who's not there.
Yes, this was from Closing Playbook. We did a trade basically saying the market makers were implying a move of $11 in either direction, pop up, pop down. We noticed that NVIDIA over the last couple earnings seasons did not really move as much. So let me show you what we did in the Closing Playbook. We did an iron condor, again, that's more complex, if you will, of a trade. It's really just putting two spreads together. So if you can trade a spread, you can trade an iron condor, and you just do two at the same time. However, what we did was we said we bet that NVIDIA, it could move higher, it could move lower, but we don't think it's going to beat the market maker expected move. Why? Because it hadn't. So it hadn't previously in the more recent session. So we had our high range set up here at 192.5. So as long as it stayed underneath 192.5, we were good. In our low range, I believe the strike was 170. So as long as it stayed above 170, we're good. So between here and here, big room for it to move. It did move. I mean, it's 1.5%. That's not even a move, but
yeah, I mean, mine's up 78%. So
yeah, mine is too. Even this morning on that drop, it still held, because now that the earnings is over and the news is out, cat is out of the bag. NVIDIA, it can move 2% lower tomorrow. It can move 3% higher, but it's not going to make that expected move that market makers priced in. So what we did was we became a market maker and sold that premium back to speculative buyers, and so far looking good. And the cool thing is, a lot of times when you think of credit spreads or income sort of plays, you think, oh, you might be making 5, 6, 7%, maybe 20% if you're good. Like Lance says, 25%. That's really, really good for premium. So we're doing 70%, depending on what you got in at, roughly speaking, ROI on this trade by becoming a seller. Just basically saying, hey, market makers are making money on this implied move. We will too. So far, so good. Yeah, it looked like the earnings were good. It's just when you shock everyone 8 quarters in a row, maybe even more now, they start to increase their expectations. Well, you better shock me again. You better shock me again. So it just wasn't shocking enough, but still
Yeah.
really good and healthy for the company.
I mean, I think it was exactly what we talked about yesterday is what we got. They were likely going to beat earnings. They were likely going to have forward guidance. They were likely going to have, excite their core base. But were they going to get that next level to move a stock? Because you got to remember, you're talking about a what 3 point what $1 trillion stock needing to move 8%. Like just put the dollars on that.
Well, you're talking about a $4 trillion stock.
Go 4 trillion, I guess now. Yeah. So you needed to move it. What's that? $400 million to $350 million to get the expected move. $350 billion to get the expected move.
Yeah, a couple billion. Yeah.
Yeah. So that's yeah.
Anyways, long story short, hopefully you guys were able to make some money on that from the closing playbook. Again, that is, if I were to ask you guys, it's funny, we've been doing this for a while. If I would have asked you guys 2 years ago who was comfortable with spreads, I would say 80% of people would say no. No way. They're confusing. They're complex. And for the whole time, I was like, but please learn them. They're really great. The risk reward is really great. Better than calls and puts. Now we've got an awesome crowd here who have tuned in frequently. You guys have been not just trading, but also giving trade ideas too. So now I believe, tell me if I'm wrong, but give me a yes if you feel like we've definitely tackled spreads, debit spreads, wrap orders, jump trades. And now what we can start doing is, now that we've tackled that, is we can start getting into some other sorts of plays. Yeah, look, a bunch of yes. Yeah. And again, I'm not kidding. 2 years ago, if I asked that same question, it would be 80% no's.
Yeah, for sure.
So you guys rock. Is what I'm getting at.
No, it's cool to see everyone kind of figure something out. And obviously it's something Graham and I are super passionate about, not just like for the sake of teaching a new trade, but like we believe this is an advantage in the markets that 90+% of traders will still never learn, and they'll be stuck buying puts and calls, hoping for the best. But once you tap into this, the world kind of opens up for you. And there's been resistance around that for years, but you guys, I think, have really stuck with it, willing to learn day in, day out, master classes, all that kind of stuff. So a big tip of the cap to everyone in here who has gotten there, and to those of you who are still on the journey and willing to get there, because you're in pretty elite territory of retail traders who are willing to learn this stuff and trade this way.
Yeah, and we had some people here said, well, they've never done an iron condor. Like Mike said, he didn't do it because don't worry, there will be plenty of opportunities along the way. We just want to give you, a few reps here and there, like practice shots, like a basketball player working on his free throw. We just want to give you a couple free throws that you can take and start practicing, start dialing it in. So over time, it becomes more comfortable. Now, I have no plans of switching all my services to iron condors or anything like that. I think they have a great place at the right time, but they're not my go-to. But it is nice to be able to have that tool in your toolbox for when the time is right, so you feel comfortable. There's one other thing that I missed. I don't know what it was. All right, well, I'll keep rolling here with normally the Tuesday training, because today's like a Tuesday for me and Nate, but it's Thursday. All right, Telegram of the week. We played this in the closing playbook. This basically said anytime the markets sell off, 2025 has been the best year to buy it back. Averages about a pop overnight and the next day in the S&P. In this case, 0.35% or so. I think the S&P finished up between 0.4 and 0.5%. So if you took that trade, the QQQs did 0.5. We made money on that spread overnight. Hopefully you guys took advantage of that one. The other Telegram of the week, I gave you a little sneak peek in Telegram of what we're working on. I will do a deep dive, not even a deep dive, but a quick overview again today of it. It's funny just looking at this now, how much it's already changed and updated in the last couple of days. It's already way better than what this screenshot was. That's kind of the fun power of AI. For the morning market update, let's take a look at where things are. And I put 2 screenshots here. Here was the market open. Here was when we started opening playbook. And now we're kind of right back in the middle of that, funny enough. So the market's opened slightly higher across the board. A couple minutes in, we saw a flush out. I think the SPY got down 0.17%. roughly speaking, and now we're kind of back in the middle. So not a lot of action going on today. We are seeing gold sneakily moving higher. Gold was in the headlines a lot a few months ago, kind of fizzled from the headlines as it's been stalled out. But now there's pretty big catalysts around gold, seasonals around gold. So definitely something to keep your eye on. We did see a flash of all-time highs on gold and then immediately retraced, and that was an overnight session, so most people missed it. But just definitely keep your eye on gold and what could be coming next. For the economic reports this week, again, we missed most of them because Nate and I were out Tuesday and Wednesday with our annual meetings, but consumer confidence came in positive. GDP preliminary this morning came in really, really positive. So previous was negative, right? If you have two negative GDP readings, you're technically in a recession. According to the prelim, we're not even close. Jobless claims strong as well. Good, healthy stats for our economy. If you are, it does kind of blur the picture of what the Fed's supposed to do with rate cuts. But we'll worry about that as we get closer to the Fed date in September. For next week, and this is important, next week, actually, is this it? Oh, yeah, wow. Man, time flies. I was looking at this. I saw Labor Day, so I'm pretty sure that's not this weekend, but next. That is this weekend.
Yep.
So this weekend is Labor Day weekend, meaning markets are closed on Monday. There won't be an opening playbook, no closing playbook. There's no, we won't have a show. We won't have anything to cover, no trades to give. Markets are closed on Monday. So keep that in mind with your trades that you have right now or trades you're planning on taking next week. Like, for example, for me, for perfect income, I typically trade on Mondays. However, since it's a short week, I may be taking that trade tomorrow, knowing that we're losing a day next week. So it's just something to keep in mind. We have normal reports outside of that, though, with the jobless claim, ADP non-farm employment, and unemployment rate coming up towards the end of next week. But we do have a nice long 3-day weekend, so I wish everyone a very happy and relaxing Labor Day weekend here coming up. For the charts of the weekend, Mike has a question here just on the chat. Nate, I'm actually curious. Do you trade weekend options when you have a long weekend?
No, the default rule is to avoid them. They're still profitable, but the win rate does go down. Profit factor goes down, so it just blends it all down. Sometimes I'll give a bonus trade on a long weekend. And so, Mike, that's what I might do this week. Flo and I actually talked about that yesterday. So we'll see what we do come tomorrow. If the markets get shaky or something, then I'll just skip it altogether.
What about your Monday programs?
I don't have anything that enters on Mondays. So
No.
Yeah, my perfect income. We may be just taking the trade tomorrow instead to give us an extra day.
Cool.
Tomorrow being Friday. For the charts of the week, this is the one I showed you last time, and I thought it was very interesting to see how closely our market is following the .com bubble boom, whatever you want to call it, of the late 90s going into 2000s. So obviously you can see the peaks here. And kind of here, it slows down quicker on the S&P. This is the NASDAQ over here. But check this out. This red line here is our market, our current market, compared to the blue line, which was 1996, 1997, 1998. Hopefully you guys get the picture. We have mirrored this almost to a T on the S&P 500. What does this suggest? It suggests that there's still upside left. It also suggests that we may be coming towards an end of the boom, but we're still over a year out. Same thing on the NASDAQ. Followed it pretty much to a T so far. What does this suggest? Well, this isn't like a crystal ball here, but this suggests if you were to sell right now and say, I'm going to sit on the sidelines for this bubble to pop, well, you might be missing out on the rally of at least of a decade coming up in tech. And I actually do believe we will see a melt up in the markets like crazy before we see an official bubble pop. And I think this one's different than the .com bubble in the sense that it's much more B2B. Like NVIDIA, people are still going to be buying chips from NVIDIA. It's not smoke and mirrors. However, I do think that we may see some diminishing returns from AI, or at least some fears of diminishing returns, and that could cause the markets to panic, in which case, at that point, I think we could see a sell-off, but I don't think we're there yet. I don't think we're within a year of it. So, but this is just a cool chart just to see how closely they've monitored each other. In other news, small caps, which we've talked about a lot lately here on this show, since they popped above the 200-day moving average back in June. the small caps just saw their largest weekly inflow since the 2024 presidential election. Excuse me. Now, this doesn't mean that small caps are guaranteed to go to the moon from here. If you remember, back in November, they had a massive, massive pop election night. It was insane. It looked like an earnings play, and then fizzled out from there. So this does not necessarily mean that small caps are here to stay. They have legs and they're going to outperform, but it does give us more reason to be bullish for the small caps, especially with rate cuts coming and what that means for them in their debt situations. Did I skip a chart? Okay, here's a cool one. Actually, Roger shared this one. Net short VIX positions at highest levels since 2022. Couple things to take away from here. This is just betting basically volatility is going to continue to decrease, or betting that there will be a continued market melt up. There are extreme bets right now. And then you might say, well, since 2022, they might have timed it wrong. They were complacent and they, did that right before the market tanked in 2022. Well, no, it was really at the end of 2022. Near the bottom of the bear market is when these VIX short positions really came in heavy. So it's interesting we're seeing that right now with markets at all-time highs, or right near all-time highs, that that the Wall Street is so bullish still right now on the stock market. So that's good news for us. And then here's my last chart for you. We've looked at this one a few times, but seasonally, very good time to be long gold. It can be sneaky right now. Gold does well in rate cut environments. I've got a whole book of research on that I can share with you guys if we want to go into that. But gold has been stuck. Let me just look at my chart here. It has been trading sideways since April. So April, May, June, July, August. It's been 5 months now of gold going pretty much nowhere fast. But I would not count it out. I think if it gets a break above the highs, we can see this thing go again another 10, 20%. And I really do mean that. In fact, I was reading a research report yesterday that had gold futures price at $5,000 by the end of next year. So it's what is gold futures at right now? 3,400. Let's see, 3,465. So that would be a $1,500 increase in gold. That's almost 50%. That's 40% in gold.
Yeah.
Now, obviously, that's a bull case, very bullish case. But I think given the current climate, the market, what we saw in the 70s with stagflation in gold, it could happen again.
Graham, with your seasonally strong gold and your seasonally weak Bitcoin, maybe you should do a pair trade. Well, pair trade action.
That's actually a great idea. I didn't think of that one. That's why I invited you onto this show.
Maybe we could tee that up on Closing Playbook or something.
That's a great idea. Would you guys actually? Let me first ask: who's familiar with the pair trading concept? Yes or no? And while we do that, I'll cover this here on Bitcoin that Nate was alluding to. We're getting really close to September, right? Can't believe it. August is almost over. Summer's coming to an end. What does Bitcoin typically do in September? It is historically the worst month for Bitcoin, right? We can all see that. Lots of red in here. There's some green, but overall it averages a 3% drop, 4% median average drop. We've already seen Bitcoin slowing down. We've made some money trading it to the downside. I still believe that we are going to see another leg up in this cycle. I still have my high end target at 150. That's 150,000 for Bitcoin spot price. But I do think, based on what the technicals are saying, the momentum readings and the seasonals, that we could likely see Bitcoin have a pretty not so fun September. Now, I don't think it's going to fall to 70, but it could get to the hundreds, maybe even dip below 100.
Below 100.
It really could. It's only 10% from here. Speaking of what has happened historically, now when that happens, I can guarantee, or if that happens, I can guarantee you, if you Google Bitcoin, you're going to see a trillion articles online of this is the end of Bitcoin. Ha, you fools, told you. Ha. They say that every time it dips, and it's gone up exponentially since those dips every single time. So I do think that if we do get this pullback, which again, maybe we can do one of these pair trades on it with long gold, short IBIT. But if we do get this dip, I think that is going to be the final good buy before this final leg up. And again, let's look ahead here. October, November, December, the strongest period of time for Bitcoin. And it kind of matches up perfectly with that 4-year cycle that we're in right now. So if we do get a drop, I think that's a buying opportunity to ride it to potentially 150. So if it gets to 100 and then we're going to buy it with the target at 150, that's a 50% return on the underlying asset, which would be nuts for any single stock. But I do think that is definitely plausible here with Bitcoin. All right, enough with that spiel. For earnings, again, we're here at the later end of the week. We had NVIDIA yesterday, CrowdStrike. Anyone know how CrowdStrike did? Let's look. CrowdStrike, flat on earnings. So if you played an Iron Condor and CrowdStrike, you probably made some good money. What about Snowflake? I saw they popped.
Killed it.
Oh, wow. Yeah. Up 20%.
20%. Yeah.
You know what's crazy than Nate is, it beat the market maker move. The market maker was in the 20s for dollar amounts, up $37 today.
Yeah, no, it killed it.
Huge.
The thing, and I'll show people, or at least walk people through. So I actually did an Iron Condor on Snow as well, which obviously is getting crushed right now, out of the money. Now I only did a couple contracts. Thankfully, my NVIDIA position has me well net ahead because I like that one a lot more. But I wanted a couple just to kind of compare and show. I wish I would have done CrowdStrike. But just because people are asking, hey, how do you manage this? So really easy. So for me, NVIDIA is right inside that move. I'm going to put like an aggressive target on it, try to get near the whole value because the implied volatility should actually continue to come down throughout the rest of the day on NVIDIA. And then if it is like in the 177 to 185, like kind of in the middle of that box, you should be able to get almost the full value out of it. So I'll take the profit there. Then Snow, which is outside the range, I'll just leave open. If I take the full loss, all good. But if it, kind of corrects hard back and fades back, then, it could turn into a winner versus NVIDIA. So kind of opposite scenarios. And NVIDIA, I don't want to let turn into a loser. Snow, I want to give time to turn back into a winner. That's how I would play, either side of the coin there on those trades.
Nice. We still have other big names coming up today. So we've got Marvel, Dell, Iron, which is not a stock that we trade very often here. It's a Bitcoin miner turned into semi data center play. Very, very cool stock. If you pull up a chart of Iron, it's been absolutely on a tear. This could be a big mover on earnings. We'll see if they have anything exciting to share. Affirm is also another big mover. Gap has been one that moves quite a bit. It's Gap, and when we had Jeffrey and Jack on the other day, they were teaching how to trade the Gap on Gap. And then Alibaba in the morning, which was a huge Chinese. It's like the Chinese Amazon. We'll see what they have to say. Probably.
Oh, dude, Gap is a huge mover on earnings. I didn't realize.
Yeah, Gap loves to gap.
This last one was like 25% move on earnings. Wow.
So still a lot of excitement left here in this week. For the market overview on the last class, keep in mind this was last Tuesday, so a little over a week ago. I said I think we're going to see a pullback coming here soon. We saw momentum declining while markets were going higher. It's just divergence, and it would just be healthy to see a pullback. So what came next? We immediately got a drop. So it was awesome. We nailed it on the head, and then Jackson Hole, the pop happened. That was that big candle you see here was Friday's price action on Powell and his speech. Markets ripped, ended up touching all-time highs from there. So where do we go from here? Well, we're nearing the end of August. So what's coming up? Well, right now we're seeing greed, the fear and greed index, using market internals to price out our buyers and sellers overly greedy or overly fearful. We're still right there in the same greed reading. It actually bumped a little bit today, but right there in that just healthy, good greed spot. However, it's the first time we've seen this in a while. The CPC, which is our put to call ratio, just looking at the options market, total options traded, are bulls getting a little overextended or our bears, we are seeing this drop into the 0.75 range. Now, if you've been here for a while, you know what this means. If you haven't been tuning in for over, like 6 months now, you may not know because we haven't had much action on it. Essentially what this does is put to call, it takes the total amount of puts traded, divides it by the total amount of calls, and it gives you a reading. Now, typically, do markets go up or down more often than not? Typically, they're going up more often than not. So it would make sense that calls are normally weighted a bit more in this reading. So I like to say my midline is right here about 0.85, 0.875 range. That's a good middle ground reading. That's a normal market condition. When we get a reading below 0.75, that means that now we have an extreme amount of call buyers. Whenever something gets overweighted one way, it tends to come back. So when we have too many call buyers, eventually what we say is, markets are probably nearing a short-term top. When the number gets here above 1, that means that we have an abnormal amount of put buyers. And again, when that number gets too extreme, that's typically a good time to be buying a dip. So we've seen that in the past here in July. This was a big one. This was the tariff crash. I mean, it nailed it to almost the day. And if you bought even when it just touched above, you probably made some really good money. And then the same thing here, you can see like when it gets extremely to the downside here, again, that's a time to be cautionary, maybe taking some profits. So we are right at 0.75, which is right at my line for, hey, we may be seeing near term that we're a little overcooked on the options market. So again, I think I was a bit early to this. I told you guys, I think starting back in here, hey, I'm going to start taking profits and lightening up my position sizes just because there's a lot of uncertainty ahead versus if we get a reading like this, we can be pretty bullish in the near term. So right now, it's just a little bit more extreme reading. We'll see if this time next week on Tuesday, if it's below this line or not. That will be a really interesting sign for us. Seasonally speaking, this is our chart that we've now been looking at. But seasonally speaking, let's just look at September here. Negative on all fronts. This is past 75 years, 20 years, 10 years, and then just post-election years. All of them are negative. September, if you've been trading for a while, you probably know it's typically the worst month for stocks, and that holds true in presidential periods as well. I'm actually going to skip this chart because here's the same chart here. Here's our presidential cycle pattern. Again, August is normally a bad month. That did not happen this August. We had a relatively, really great month for August. September, however, is also a down month. So now with the stars sort of beginning to align with momentum diverging, put to call getting a little out of hand and seasonally weak, I definitely think that this may be time to just be prepared for some downside move. And it's funny because, Nate, this is almost completely reminiscent of what happened in February. I was looking at the same sort of data. It was like back in here where you can see the seasonal said down. We're looking to put the call. It said it was a little over extremely bullish. And I said, I'm going to start taking some profits. I'm going to hit the sidelines with some cash. I actually pulled a lot of my stock account out to the sidelines. And then two, maybe 3 weeks went by, and the markets was very similar to this. Just kept, it wasn't going sky high, but it was just kind of putzing around, going higher and higher and higher. And I actually, like in the final day, was like, maybe I got it wrong. Maybe the markets are just going to go higher and just ignore everything I've told you. And then like almost immediately, they started dropping. So I'm going to stick to my guns here. Again, I started talking about this middle of early August. I'm getting a little worn out of seeing the markets go to all-time highs. Well, I would love it if every day it went to all-time highs. But when I'm trying to make a prediction here, I want to be right. And so now I'm getting to the point where it's like, man, I've been saying this for 2 weeks now. And we haven't seen a real pullback yet. But I'm going to stick to my guns here and say maybe I was just a tad early again. So my upcoming prediction here is September is here. Yes, it is still August, but come Tuesday, September is here. I do think we are going to see a pullback. I don't necessarily think we're going to see a crash. Nothing like what we saw in March and April. But I do think we are going to see a good, healthy pullback, which could be 5, even 10%. We could even come down here to the 200-day moving average. And I do think that if we do that, we are going to see an extreme V-shaped recovery to the upside, which would be a very, very great trading opportunity. If we do get a big, healthy flush, which is kind of what I'm hoping for and I will be excited by, we then can increase our position sizes, get more bullish, and hopefully really capture that opportunity there. So for a sector view, let's look ahead to September. Again, a down month historically for the markets. Not a lot of positivity in the sectors. The only ones that have come ahead, seasonally speaking, are communication services. So like your Metas, Googles, T-Mobiles, AT&T, some other companies I'm missing. Energy stocks, which I'll show you next here, how energies have been sneaking higher. And look at this. Let's look ahead. Obviously, they're all green for quarter four for the most part. So we have a lot to be excited about for what's coming up. But look how energy kind of sneakily heats up here going into the winter months. So just something to keep an eye on there. And then healthcare also seasonally bullish and same sort of thing. Sneaks better and better throughout the end of the quarter. So for the sectors, this was last class last Tuesday. I told you not a time to be going heavy all in. There's just not a lot of certainty that the markets will go higher. There's a lot of uncertainty. So let's just be smart. These are the best sectors seasonally and for current strength. And this week, notable shifts week over week. We still have the two top technology and communications leading the way. Remember, communications is our seasonally strong one. So if you had to pick between one of the two right now, I personally would be leaning towards communications. And we down here on the other side of the map here, we've seen some movement as well. Nothing crazy, but I did note that energy was the only one to pop 2 slots higher. And again, energy is turning into a seasonal month and actually seasonal period through the remainder of the year. So for the top sectors right now, the ones I'm looking at, the ones I want to be trading, again, not a time to be going heavy all in my opinion. You can do whatever you want with your money. I'm not going heavy all in. But these are the sectors I will be looking to trade. Again, communications probably being my favorite of the bunch. And then I've got a yellow highlight here on energy, knowing that energy can be sneaky here over the last few months of the year. So for the nitty gritty, right now for the Apex top signal of the week, and I'm going to pause here for a moment to show you just a little sneak peek of why we missed the last 2 days, and hopefully it makes you guys excited. But Lily is popping up another Apex entry for us here. You can see that here in the charts, and then you guys can write down the profit target and stop loss if you can see that. Nate, can you see that or no?
It's a little. I can see the target looks like 848. But
all right, let me just type this for you guys.
Oh, there we go. Now I can.
I'm gonna see if I gotta pull up my new tool. All right, there we go.
That's a nice view. I can see it now.
All right, let me do this. Oh man, this is gonna backfire on me. This is why we need super smart coders and developers to take it to the finish line from here. Because Lily is saying no active signal on my end, but I think it's because of updates on Fridays. So it's here. I'll show you, but I'll show you what I'm talking about here. So let's take a look at this. So this is why we were out. Oh, this Apex indicator isn't why, but this is one of the reasons we were out for the last 2 days. We were working with our team on, hey, how can we take our software's tools, strategies to the next level, give our subscribers the benefit of AI and all these massive developments. So I'm sure you guys have probably had a taste of that early on with like the income machine. Who here has the income machine? Feel free to post a yes in the chat. And what a cool kind of breakthrough that was, where not only does it give you signals, but it also can pull option selection. I hope that was kind of a really cool moment for the folks who did get to take advantage of that, because for me, it's like, wow, we've always been able to build strategies, indicators, back test. We have not been able to tie it to options, and especially at that level that you have there, Nate. But here, let me just flip like to Meta, for example. We'll see if it works. So this is if you have the Apex tool right now, it's in Thinkorswim. It's an indicator. It's what I just showed you there on the charts here. This cool tool, blue arrow, profit target, stop loss. And then from there, it's really great. I mean, it's been excellent. We've been nailing winners on it. But for the users, for the customers and subscribers, if you want to trade on your own, you got to go pick the options. You got to go pick the strikes, the expirations. And I know a lot of you guys are really, really good at that. But for newer traders, that can be kind of a daunting task. What do I do? Where do I start? Well, the cool thing here is similar to what Nate's done with the income machine, is now we're going to start seeing this sort of come across more of our programs. Not only does it give you the indicator with the target, stop loss, it gives you the full trade history. It gives you a back tester so you can see for yourself. This one's on Meta, for example. Meta, since 2020, over the last 5 years, 13 trades, 92% win rate, average return, average hold time. This is typically, we've taken this information and then gone manually to pick the options. Well, now it's coded up to use that information to give you optimal options. So let me just see if this works. Again, I haven't made any updates to this since yesterday, but let's see if this works. So if I want to trade call options on the current Meta signal, got fingers crossed it works. But
it's always brave. I've done this enough times. You're always brave when you're trying to click the button in real time when you're halfway through the development to show it off. But looks like it's getting there.
Well, there you go, right here. It's not as pretty as it's supposed to be because we have an error here. this is where I can only take it so far based on what the tech team has taught me. And I get it here, then I'm going to turn it over to them to take it all the way home because I am not a Python coding wizard. It'd be fun to be one, but it doesn't look visually as cool as I mapped it out. But you can still see here for Meta, it's pulled the option to trade. If you wanted to trade basic call options, buying the 3rd of October, 750 call. Here's the current price, and then down here is supposed to be a cool little calculator for us to show us what that means. Again, this is very preliminary, but just to show you the upgrades that you guys are going to start seeing, and hopefully that gets you guys excited. Because again, up until now, when we have Apex, we get a chart like this, we get profit target, stop loss, we know the historical performance up, through the most recent data that we've shared. But now we're going to get it all in real time with option selection as well. So hopefully you guys are really excited about that. I'm excited about that.
Oh, it's going to be incredible. I mean, just being able to layer stuff on top of already proven winning strategies and get to the next level, making them more, user friendly, give them more control, give them options. I mean, and I don't mean options as in calls and puts. I mean options as in different ways to trade. It's going to be pretty incredible as we start to, really take this into hyperdrive.
Yeah. No, I'm very, very excited. All right, let me pull up Lily here. Again, if I can, I don't know why it has a hard time dragging this up here. Here's Lily on our chart. You can see the apex signal. You can see not all signals win, but in the past, this thing was an absolute dominant signal to trade. We did just take Lily on a gap fill. Nate, I'm not sure if you got in on that. I used last week's expirations. We're going to see if we could get a crazy 900% move. We did get a 200-ish% profit on our more conservative play. The 900% one didn't work out. That's all right. But look here, this is my point. Lily did go on to fill that gap that we talked about. And now at the same time, now that the gap is filled, we also have Newton going bullish and we have an apex entry. So for me, this looks like a really solid trade. So if you want to take Lily, again, once I have that new dashboard all polished up and published for you guys, it would give you, hey, do you want to trade basic calls? Do you want to trade a more conservative wrap order? Or do you want to go for the most aggressive play possible where it's basically using the average hold time and the profit target to give you 300, 400, 500% return potentials? But I'm just going to give you guys a wrap order manually here. And I'm going to pull my, again, you'll see the process that I normally have to go through to trade options here. So like right now we know Apex is an entry on Lily. Wow, this is a long average hold time. I'm just going to tighten it up and look to see if we can just stack some wraps on it. So I'll probably just do a monthly. 85% win rate, huge average return. This one's a long average hold time, but the profit factor is monstrous. So again, I'm not going to look for options 28 weeks out. Although if you took the dream portfolio, that would be kind of a similar approach there. And it probably, historically would work out really good for you. But I know we like action here. So we'll do something about 4 weeks out and see if we can stack it from there. So this is our current process we have to go through. Now I have to go to the options market. And now let me go to next month expiration. So now I open up next month and I'm going to pick some options. This one actually ended up being pretty good. Let me just go one strike out. Let's see. Not so good. So here I'm manually having to do it. And we've talked about this before with, let me make this bigger for you guys. Sorry. We've talked about how cumbersome it can be to pick options and why the income machine was such a huge breakthrough. It's going to be the same thing here for the Apex tool. So here's what I'm going to do on the Lily trade. I'm going to go to the September 19th expiration. Again, this is typically a longer hold time of a trade with Apex. I'm just going to break it down so we could maybe have multiple plays, but it's going to be the September 19th Apex Lily by 19 September 25. And then I'm going to wrap it with the 732.50 call. And I'm going to sell it by, or I'm going to wrap it by selling the 730 call. So I'm sorry, I'm typing this up for you guys. 735 call. This is at net debit 128. I will post this in the chat. This is a wrap order here. So visually, we're using the 19th of September. And keep in mind, this is a weekly chart here. So these aren't daily. Let me just go to daily. I'm going to play this. where we have all of this time, 19th September, for Lilly to close above 735. So see my line here, see the price. It could drop from here, it could go higher. As long as it's basically flat from here, it gains $1 on a $700 stock over the next 3-4 weeks. It will pay close to 100%. I'll do the math for you here in a second. But again, $1 move, this is what's really cool. $1 move on a $730 stock, it has to gain 0.1%. So not 1%, not 0.5%, not 0.25%, 0.1%. It doesn't even have to really do anything. So as long as it stays good and healthy, you can make a good return on investment. And someone here said, Max, that you got from 120. Wow, I'm showing 135 mid price. It was 128. That's what I'm going to set my limit at. So just real quick here, the math behind that. We can get 95% return on our investment, assuming I get that 128 price, which I'm going to set it at. Oh, 120. People are getting cheaper. I'm going to try 125.
Yeah, your mid actually dropped down to 113 there for a second, but didn't last long.
Wow.
So,
Mac, what brokerage do you use? I'm always just curious. And Scott, what brokerage do you use? Let me just try 128. And make sure you're using a limit order when trading spreads for the newer folks here. But say I get filled for 128, that's 95% return on my money if NVIDIA gains 0.1% over the next couple of weeks.
love it.
All right, we'll keep moving on because I did just look at the clock, and Nate, I know you have some stuff to share as well. Maybe we can cover this tomorrow, but this is a hot sheet pick of the week. It's our seasonally strong stocks. Gilead right now, biotech stock. You can see that's a very, very strong trend here. Looks really good. It's seasonally entering a hot period starting tomorrow, where it's gone up for the last 10 years in a row from those dates. So that would be August 29th through September 20th. So if you wanted to use options here, I'd look to use the 19th of September, the same expiration we just used on Guild. And you can see it's a 3% average return. That would put it about 115 on the stock. So if you wanted to be aggressive, I don't even know if aggressive is the right word, but if you want to try and time it up perfectly with the average return and the average move, I'll just type it up for you guys and throw it in the chat, because again, I don't want to eat into too much of Nate's time here, which I probably already have. And then I've got one more for you guys. I'll turn it over to Nate after that. And then remind me tomorrow, we'll do that pair trading concept on gold and Bitcoin. All right. Net debit 40. I'm just going to throw this in the chat for you guys and in our trade sheet. Here we go. All right. That's how I would trade Gilead for the hot sheet trade of the week. And then for Newton, I like Boeing to the upside. It's industrial. It's a good, strong sector right now. It looks really good. It's funny. I haven't really traded Boeing since the whole major dump a few years back on the plane issues, but it does look really good now. We're seeing Newton turn positive again, which means it's just moving at a higher than average pace. So keep an eye on Boeing. For the downside, this one was kind of surprising to me after how good it was to us. eBay has flipped bearish on Newton. So this doesn't necessarily mean I want to go short on eBay, although if you're paying attention to our classes, you know that if it gets below this gap here, that could be a gap fill opportunity to the downside. But this is definitely just a stock that I'm not looking to buy the dip on right now. It's not giving us good confirmation. It is in a discretionary sector, which has not been doing good. So this is just something to say, hey, let's keep an eye on eBay. I'm not buying it right now. If we get a break below this gap up day, we could do one of those gap fills to the downside. Or maybe it doesn't drop below there. Maybe it just settles out here and we see Newton flip back green, in which case then we can go long again and start buying it. But I just wanted to give you eBay. I'm sure that some people are looking to be buying that dip right now, but it looks more like a falling knife to me. All right, Nate. I'm going to turn it over to you now.
All right. Well, you said you didn't have that much to cover, and I'd have plenty of time. So good job. You nailed it. 10:50. We're we will do this, guys. We'll let me talk through the idea. let me talk through the idea. And then we can take the trade tomorrow in closing playbook. So not today in closing playbook, because today in closing playbook is shotgun trades, which we'll be doing here at 3:30. Don't miss shotgun Thursdays. It's a lot of fun. Even if you're not, going to take all the trades because they're not really like high confidence recommendations. A lot of fun. I think you learn a lot by just going through the option chain, finding opportunities. Also, I have a big announcement for you on the closing playbook regarding shotgun trade. So I'll be giving you that very urgent and important announcement. But for now, let's walk through just a quick concept, because a whole bunch of people, Graham, when you were talking about potentially negative seasonality, were asking, okay, well, should we be looking at hedges and things like that? And what I want to do is show you one way to approach that, because I don't really like traditional hedges. I don't like buying puts and letting them just burn up if the market keeps grinding higher. But I do like, especially for me, where I'm very bullish, to have something that can act as a bailout. So I'll do that real quick. The reason I don't want to go too long here is because we do have that members only class starting at 11 a.m., guys. That's where I'm going to give people one more chance to walk through the dashboard, talk about all access. I'm going to bring that back out, but you do have to be a member to join us for 11 a.m. So it's in your members portal. There should be a banner in there. You should get a direct link to your phone and your email if you're a member. All that sort of stuff. So we're 9 minutes away. So that's why I'm going to be quick here, but don't worry, we'll come back tomorrow, because this is not really like a timely trade unless the market goes crazy. Tomorrow afternoon, we can get this as a weekend trade. So the idea basically is this two-way option. How do you put a box around the market so that you have a hedge where if the market goes down, you will make some money, but if it grinds up, you actually are still in position to make money. So this is the XSP currently trading at 647. Now, here's what I think most people do. They say, okay, I'll put a box around the market, and they'll do something like this. They'll put it up at 657 and 637. So there's a box for you. And they basically say, okay, so if the market goes up $10, I'll make money. Or if it goes down $10, I'll make money. And I really traditionally don't like those sorts of kind of two-way trades. What I like to do is actually have an imbalanced two-way trade. So I like to pull this down just a little bit so it looks more like this. And the reason is very simply because usually the market will grind a little bit slower up, then it will fall down. And additionally, what I'm really protecting against is a big drop down. And so I kind of want to lean it toward grinding down. And if we get a big flush, I'll make money. And if it grinds more slowly to the upside, we'll make money. And so the way that I would do this, which we can do on tomorrow, is we can put a 30-day trade on. So we can go out 30 days, which would be like, to get my actual size of my box right, it would be like there. Okay, so the box would be about that big to move either above or below. And so if you go back, so, take it back to, where's August 1st there? August 1st, and you give it a box like that, well, you can see, obviously, boom, it was way above this box, easy win over the next 30 days. And then if you go to July 1st, let's find July 1st here and do it that way. Again, we want to imbalance to the downside. You can see easily by the end of July, we were well above that. We typically use a target, but you could just let it go all the way up. And then if we go down here and find June 1st, where's that? That's over here. There we go. Imbalance that down on the June side. Boom, you can see by the end of June, we are well above that box. And then if you go down to May and you put a box here around May, and again, there's the candle May, so you imbalance like that. Well, you're way above that with a comfortable win. And then if we go find April 1st, where's April 1st? Oh, here we go. April 1st, Liberation Day, how could I forget? And you put a box like that, well, you can see, obviously, if you have a target and you are, 15% below the box, even though it's like April 7th, you're going to hit that target. Now, amazingly, where is April 30th? Amazingly, this came right back. Yeah, this came right back and finished within a couple points in April, which is just wild considering it was the biggest drop of all. But this is where you use the target. And then just to keep going and show you one more example, if you go over here to March and you put a box around March 1st, there it is. Obviously, you're going to finish well below that. So is anyone seeing why this is kind of appealing as we go back and look at if you set a 30-day box near the first of the month over and over and over again? Are you guys seeing why this is kind of an appealing trade to be in a position to take? Because more often than not, if you're gripping the market, 30 days or so, even if it chops a lot during those 30 days, just a couple of candles in the right direction are going to move enough to get you on the right side of that box. So what we want to do is we want to set that box up here. Now, in all those other examples that I showed you, a box this size would probably pay about 15% ROI. I didn't actually run through all the numbers, but 15 to 20% ROI because you're about 1.7% of net movement. So that is the kind of the traditional payout of 15-20%. But because the market's moving so slow right now, we can get more like 40% out of this box. Now, Mark, good question. You can't do this as a straddle. I mean, you can, but the ROI in the required move becomes way bigger. A lot of those examples I showed you would not work out too well with the traditional straddle. So what we do is we set up a spread on both sides. And like I said, then we imbalance it. And I actually think that's the big mistake that people make when they're trying to trade on both sides. They balance it out. They say, okay, I'll go $10 on one side, $10 on the other side. Just shifting that balance a little bit, you can get a better risk reward and a better probability on that trade. So that's kind of what I wanted to walk you through for all of you guys who want to hedge, but you don't just want to light money on fire if the market does keep going up. This is what I really like doing. So we'll plan on doing that. So lots of things going on. Today, 11 a.m., literally 4 minutes from now, we are getting in that members only class. So make sure you are there. Again, check your phone, check your, Telegram, or not Telegram, but text, email, direct link, all that's a Zoom link for members only. Make sure you do that. Number 2, make sure you're on Closing Playbook today for shotgun trades. A lot of fun. And then tomorrow, make sure you're on Closing Playbook. We'll set up this box trade with you there live and put some real money on it. I might actually put a little more. A lot of times I'm just doing, a couple contracts as an example trade. That one I might load up and put a few grand on, maybe $5,000 or so, because I do want to have a little bit more of a hedge. As Graham said, we'll probably get that flush here at some point, and so I want to be prepared for that in my trading account. So make sure you're there for that as well.
And real quick, before we jump over, I know we had some questions on NVIDIA. Do we hold it? Do we sell it? You can definitely try to sell it. The market maker move now for NVIDIA is $4, which keeps us, it's like still $10 to hit either side of our range. So according to market makers, we are well in the clear on our position if you want to let that expire.
I put a buy order for a couple pennies on there. If I get filled, great. If not, it should just keep, grinding down toward my target. But like Graham said, your probability is probably 90% right now, plus that it'll expire worthless for a full profit there.
All right.
What I was gonna say one other thing. What was I gonna say? Shoot, I lost it.
To the other room.
Well, definitely that. Definitely jump over to the other room. But I was gonna say Apple chart looks amazing. Check out Apple.
Oh, yeah.
Actually, I have it up right now. If you guys are still seeing my screen, Apple daily chart got that little pullback, building. I think we're headed at least to this recent high, 235. Consider a jump trade on that. With a little extra time. See if Apple keeps picking up. We talked about this one for a long time. We were incredibly patient through that April, May slog, but I think it's moving in the right direction. So loving Apple right now, even though I took a lot of flack for it on my YouTube interview. All right, guys. Well, we will see you in literally 1 minute over there in the members only class to walk through the intelligence dashboard, what I think is the most important, fundamental shift to trading. Hopefully what I think will open the door for many of you, not just to have good strategies and ideas, but to really take advantage of the market in a unique way that actually is focused on building your account and maximizing your potential. I think this goes way beyond a strategy or a trade, and can't wait to talk about that. And hopefully make some people less mad at me as we get a couple more spots figured out.
If you guys missed it, we had it open for less than 24 hours because you guys are so awesome. It sold out right away. But if you missed it, definitely come to this because I don't think we're going to be doing many more of these events. So, David, if you don't mind posting that link, that'd be awesome. One more. Oh, I see you did. Awesome. Cool. Well, I'm going to jump over there, Nate. See ya.
All right. See you, everyone.